Hey, this is Annie Dickerson with Goodegg Investments. Ready to talk real estate? Let's get cracking. Okay, let's talk about risk. The elephant in the room with any investment is risk. And with every investment that we go into, we work hard to mitigate all of the risk factors. And that's what I wanted to talk about today. Okay, risk number one. This is perhaps the biggest one that people think about, and it's the risk of losing your investment. You could invest $50,000, and if a bunch of things go wrong, hey, you could lose that money, and that's a very real risk. And here's how we mitigate that risk is one, we put in place an experienced team who's done this before, who has a strong track record. We buy an asset that's cash flowing right out of the gate. We invest in growing markets. We utilize conservative underwriting that gives us a buffer in case things go wrong. And we always advise our investors to invest with cash and not to take out a loan. Okay, that's risk number one, is losing your money. Now, risk number two are that the budgets and the timelines could be inaccurate. So the budgets that are projected and the timelines that are projected could be not quite right. I mean, I think we all have heard a story of renovations that have gone horribly wrong and it's taken a lot longer, or they've peeled up the floorboards and found things that they didn't expect. So that can absolutely happen. And here's how we mitigate that risk is we put in place experienced teams who have done this before and who do the due diligence, who actually go out and talk to the vendors and get those quotes up front. They do a very detailed inspection and they work very closely with experienced property management teams to take a look at the business plan and to plan out that renovation beforehand. And the other thing that we do is that we raise all of the capital expenditures or CapEx funds up front. We don't rely on the cash flow to fund those renovations. Risk number three, something that's on everybody's mind, is the risk of a recession or some sort of correction in the market. And that's absolutely a very real risk. Let me tell you how we mitigate that risk. Again, we put in place an experienced team. You're always going to want a very strong team managing the asset, because if anything goes wrong with the renovations, with the recession, with anything, that team is going to be in place to make the right decisions on behalf of your investment. The second thing we do is put in place a loan with a buffer, essentially. So loan terms that have the flexibility for us to hold an asset longer than projected if needed. So for example, if we had projected a 5-year hold, but at that 5-year mark, the market is soft, then hopefully we'll have put in place a loan that has a 7-year hold, for example, or a 10-year hold, so that we have that flexibility to hold the asset a little bit longer if we needed to. And the third thing to mitigate the potential for a recession is cash flow. So we always buy assets that are cash flowing right up front. So if a recession happens, if we absolutely need to, we don't have to do the renovations. We can just hold the asset as is and know that it will still continue to cash flow and cover our expenses. All right, risk number four. The fourth risk is that you as an investor, as a passive investor, might get left in the dark. And this is a very real risk, right? I mean, for me as a passive investor, this is even scarier than potentially losing my money because I want to know what's going on. When I invest in a rental property, I know exactly what's going on. But when you're depending on another team to communicate that information to you, there is a risk there that they may not always be honest and open and transparent with you. So that is an absolute risk. And so here's how we mitigate that. Again, we go back to the experienced team with the track record. And here's the thing, the track record is so important. You want to invest with people who are not doing this for the first time. You want to invest with people who have a tried and true track record, who have done this before successfully, and you can ask those people for references. And you can talk to other people who are invested in their deals and see how it's going. You can ask for examples of communications that they have sent out to their investors to see the level of depth that they are communicating. Okay, the next risk is the risk that you might need your money back. Investing in a syndication is a long-term thing. And so if you, within that, say, 5 to 7 year hold, you lose your job, or you have a parent that gets sick, or any number of other unpredictable factors that happen, you might need that money back. And so that is a very real risk, and that holds some people back because it's the risk of the unknown. And so to mitigate this risk, one big thing we advise is to always have a reserve account. If you're investing $50,000 and that is your last $50,000, then absolutely do not invest it. Hold on to that money and save a little bit more before you invest that money. So you always want to have a runway in case something comes up that's unexpected, then you don't need to tap that money that's in this illiquid investment. You have other reserves that you can tap into. The last risk that I wanted to talk about is one that often people don't think about, is that a better investment might come up. You might invest in a syndication today, and then next month you run across another one, either a syndication or some other type of opportunity, and you say, dang it, I wish I had hung on to those funds so I could put those into this investment. And that is a very real possibility. There's all kinds of opportunities springing up all the time, and you're learning about new opportunities all the time, and so are we. And so this is a very real risk. So to mitigate this risk is, one, the obvious is always try to have some other funds that you can invest. So don't invest with the last cent in your pocket. Always have a little bit extra that you can put into other opportunities. And the second thing, and this is perhaps the biggest thing across the board, is to always invest based on your investing goals. So you should never jump into an investment willy-nilly. You should always evaluate every investment opportunity based on your personal investing goals. And if an investment does meet those investing goals, well, then you've met those goals by investing. So if a better opportunity comes along, hey, you know what? It might pan out, it might not, but you know that the money that you have invested already are in investments that meet your investing goals. So overall, yes, there are a lot of risks that come with investing in a real estate syndication, just like investing in anything. And it's very important for you to be very aware of the risks going in so that you can go in with your eyes wide open so you don't get stuck midway through the investment. Well, that's it for now. Until next time, have a sunny side up day.